Hello traders, Gary Wagner here just after 10 o'clock in Honolulu, 4 o'clock in New York on Wednesday, the 15th day of April, tax day 2015, and this is the daily report for gold and silver. We have the dollar under tremendous pressure. We've got the precious metals advancing from that loss. Currently, we're looking at gold trading above 1,200 an ounce at 1202 and change. It has had a low of 1188.80 and a high of 1204.30. Silver is also advancing on the day, up about 17 cents, trading above 1632, just off of the high 1637, low 1603. We'll look at silver in a little bit. So traders, as we look at the gain today, the gain is about $10 on the day. It is a combination of a weakening U.S. dollar as well as some real buying coming into the market, both of those in green today. To give you an idea of what we're looking at, I've put up the Kitco Gold Index. And when we look at that, we can see that in terms of gold, for example, we've got about $4, $3.80. That is due to a weakening U.S. dollar, but we've also got buying in the market. That's accounting for $6. You add them together, and that's where we're getting our $10 gain on the day. Of course, we talked about a potential setup in the market in which we had the combination of a candlestick pattern, where the market was, Fibonacci retracement, as well as MACD, all alluding to the potential of the market going lower and having lower prices. We talked about this. We had this dark cloud cover here. We also had the MACD looking as though it really wanted to cross. And once that happened, we really set up a parameter in which we would trigger a sell signal in the market. So we had the MACD, looked as though it was going to cross. We also had this dark cloud cover, and what we said was that we really need to wait for a confirming candle. That was this day, meaning yesterday, in which we would have a red candle with a lower low and a lower high. However, as I looked at the market and as it traded lower, the way that it bounced off this 50% retracement level really made me feel as though it found some support, and especially when it began to trade above the 38% level at 1192, that to me really negated the call, because what you're looking for on this type of a pattern is really a long black line, or a long red line in this case, where we're using red and black, and we really want to see a close that is near the lows. We don't want to see it bounce off, because by virtue of it bouncing off, it's really showing us that there was some support in the market, and so we remain neutral rather than going short. In hindsight, that was absolutely the right move to make, because today we have the market trending much higher. And one of the things that we noticed, and we talked about on yesterday's show, is that what we can really see is when we take a look at this rally here, up to the top, then as it comes down, we have a low. The low is above the previous low, so we have a higher low. And then the market moved up and actually made a higher high. That's right in here. And now, when the market came down, we actually have now a higher low. And so that really told me that a case could be made for the market moving up, because we've had a series of higher highs. We've now had a series of higher lows, and that is indicative of a market that's trending higher. However, the fact is that we really do have some real resistance in this area of about 21, and without really seeing the market break above that, my question is, will we remain range bound between 1182 and call it 1223, or will the market have the momentum to either break below existing support that I'm currently pegging at 82, or resistance at call it 1223, which takes us to viewing our weekly candle, which is kind of interesting, because for the week obviously we're still down on the week. Let's just go ahead and refresh it. But yeah, we're down on the week, but look at how it's come off of these lows that we had, and it's trading much closer to the high, very much like an umbrella candle group, whether you want to look at it as an inverted hammer or a hangman, and that's going to depend on where it's located within the trend. But if you look at these closes over the open to close, meaning the real body over the last 3 weeks, let's say, what we see is that it's been in really this defined range right in here. You've got some extreme lows, you have an extreme high, but for the most part, this market really has been trending just within this area, kind of hovering around $1,200 per ounce. We're looking at our weekly oil chart, and if you recall from yesterday's show, I talked about the fact that we really needed to see the market break above this 55 because that's really where we were looking at on a technical basis some resistance. We certainly are seeing that today. When we look at our dollar chart, now this is a daily index. The candles represent 1 day of movement, but you can see now for the second day in a row, we do have a lower dollar index. We do now see that that this top was capped really on a daily with a star kind of gapped in the center of that. Let's go ahead and blow that up, and I'll show you what I mean. But you've got this market, again, this is a daily chart, but you've got the market moving up, just touching over 100 on the dollar index. You can see you have a very, very small bodied candle. That's very much a star-like candle. This is a variation then off of a Three River Evening Star. And this would be your confirmation. It's closing near the lows. You are getting a lower low. You are getting a lower high. But in terms of the range, I would like to see it much closer to the low. That would tell you that the momentum really on a technical basis is to the downside. Equities markets back to the upside again. So we've got a majority of these markets moving higher except for the dollar. That was the unusual occurrence that we saw on Friday with all of them moving higher. We do have the equities markets, this being the E-mini S&P 500, it is flirting with 2100 at 2099, but you've got a solid up day in that particular market. And when we look at the VIX, the volatility index, you can see that the volatility is coming out of the market. That VIX is moving lower. So traders, as far as silver goes, interesting scenario right now because you do have the MACD, and that crossed a couple of days ago. You can see that right here, obviously. That cross right here. Market did come down a little bit. It is moving back up. You get that same kind of engulfing bullish that we got in gold, with gold trading higher, silver trading higher. We remain sidelined, awaiting to see if some trend can really develop out of this kind of sideways trading that has been so prevalent in the market of the most recent past. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow on Thursday for another daily update review.